Welcome back to Bunnex Investment Group. In this video, we are going to talk about the best trade setups. These are the setups that can make any unprofitable trader profitable. So basically, money is made when we get into the market, meaning entries are very important in any trading system. So any trading system will require a robust number of entries, and the institutional market maker method that we trade has several of them. So these are some of those we actually use to make our entries. So in this video, we'll talk about two powerful setups that have been more profitable than any other I have known. So we'll start by chart setup so that we can easily spot the patterns. We'll need several tools on our charts so that it will be easier for us to make our decisions. Make sure you have somewhere to take some notes and be sure to be part of our free Telegram channel. I'll leave the link in the description box below. Firstly, we've said we need to start off on chart setup. How does our chart need to look like for us to spot these setups easily? Before we talk about anything, we need to set up our charts the market maker way. We'll need the following indicators, which are 5 exponential moving average applied to close, 13, 50, 200, and the TDI. I can provide you a template of these indicators for free. Just shout out through the Telegram I've provided below. For proper observation, we may want to have our background set in gray. This is basically to just make the chart much more appealing and much more clearer, smart, and very much professional. So you just need to set your background color to gray. Here is how it will look like when you set up the chart as I've mentioned above. So basically, this is a template that I can provide you for free if you communicate with me via the link that I've left in the description box below. Basically, we have the 13 in red, the 5 in yellow, the 50 in blue, the 200 in white, and the TDI here at the bottom part. If you have been our subscriber for quite a long period of time, you understand all these indicators because we talk about them over and over again. All right, so this is the moment we have been waiting for. Below are the setups in subject, and we'll go over the rules needed to execute them. The first one is the H1 50-50 bound setup, and the second one is the M15 ID50 setup. So basically, these are the setups that will actually allow you to trade with the trend. I'm sure we've all heard about trade with the trend or make the trend your friend so that you won't get trapped. So in these particular setups, you will be actually trading with the trend. How do we go about them? The H1 50-50, as the name implies, this setup occurs on the H1 time frame. Here are the steps when taking this particular setup. You first need to see what we call an anchor. An anchor is basically a peak formation high or a peak formation low, and basically it comes after 3 days of rise or 3 days of drop. In some instances, we have a scenario whereby we have 3 days of rise, we create the anchor, and we get the H1 50-50 bounce, and then we create what we call a peak reset. This peak reset usually comes within the structure of the 3 levels or the structure of the previous cycle. So this is also an anchor which you can actually get an H1 50-50 bounce. You need to see a 1350 EMA cross after an anchor has been set. If an anchor has been set, we need to see 13 crossing over 50, then price pull back to the 50 EMA, which is the first pullback to the 50 after an anchor has been set. Entry should be done at RSI line crossing the signal line, and I'll show you this on the charts. M15 ID50. Same as what I've mentioned above, the name implies where it occurs. It occurs on the M15 time frame, and here are the steps when taking this particular setup. So the differences between this and the other setup, the 50-50, is this one is an intraday setup, such that intraday 50 actually means intraday 50 first to 50 EMA bounce. So basically, you also need an anchor at the left side of your chart, 1350 EMA cross, price pull back to the 50, and then entry at RSI line crossover the signal line. I'll show you shortly on the charts. So let's now go over the charts so that we can explain the two patterns as we have described them. So basically, this is USD against CHF. USD against CHF is actually a pair that I trade much of the times. We are going to start off with H1 50-50 bounce, which is basically a swing type of entry. We've said when you are analyzing, like in this particular case, this was a rise. After a rise was actually being issued, we could count levels going to the upside. So in this particular case, we had the first day of rise like that. Then we had the second day of rise. And we had what we term the anchor. An anchor was reached at this particular point, which is basically a reversal pattern, a reversal point, sorry. So in that case, we had a 1350 EMA cross, the 13 in blue and the 50 in red, the 13 in red and the 50 in blue. After that, we can see the market coming back to this particular 50 and going beyond as a way to trap traders to go long. So in that particular instance, that is where we want to now make our entry. We've said our entry will be based on the traders dynamic index, crossover of the RSI line and the signal line. That is where we'll actually make our entry, and our stop loss will be right above the structure. Take profit for this particular entry pattern will be actually a swing. You can hold your trade for 1 or 2 days depending on your threshold of patience. Then when we move over to the M15 time frame, the same rule actually applies. But this now is a quicker entry and a much more lower stop loss and lower targets as well. So we had this particular anchor, right, which is basically first leg, then second leg at first leg level like that. We had a crossover of the 1350 EMA cross, then the market pulled back to this particular point. So this could have been our point of entry. However, we want to get at least a 15 to 20 pips retracement to the 50 EMA when we are trading this particular setup. So in this case, this was not a valid pullback, but this one was the rightful pullback. Then our entry, as I've said, will need to wait for a crossover of the RSI line in green and the red line in red, which is basically the signal line. Then our entry was going to be enjoying this particular ride. So basically, that is how you actually do this. You need to at least practice much more and get much more examples. Do not hesitate to ask questions in the comment section. I'll be happy to answer. On that note, we've come to the end of our today's video. See you in the next one.